Namaste students, good afternoon. Today we are discuss about in banking lessons 2 mark question and answers. First question, define commercial banks. So the commercial banks refers to a bank or a division of a large bank. So which more specifically deals with a deposit and loan services provided to the corporations or large middle sized business. So as opposed to individual members of the public or small business. So the mainly the commercial bank is a large bank. It's a provider more specifically deals with deposits and loans. Next question, what is credit creations? So credit creation, it's nothing but the multiplications of loans and advances. Commercial banks receive the deposit from the public and use these the deposits to give loans. Next, however, the loans offered are the many times, so more than the deposits received by banks. These functions of bank is known as credit creations. Next, define central bank. So the central bank, the reserve bank or the monetary authorities, the institutions that are managed as a state currencies, money supply and interest rates. So the central banks also usually oversee the commercial banking system of their respective countries. So the next questions, the distinguish between the CRR and SLR. So the distinguish between CRR and SLR. So the central bank controls the credit by changing the cash reserve ratio. So CRR is nothing but cash reserve ratio. So this is changing the cash reserve ratio. So the commercial banks have excessive cash reserves on the basis of which they are creating too much of credit. This will be the harmful for the larger interest of the economy. So it will rise the cash reserve ratio which the commercial banks are required to maintain with the central bank. Next difference is for the statutory liquidity ratio. This is SLR is the amounts which bank has to maintain in the form of cash, gold or approved securities. The quantum is specified as some percentage of the total demand and time liabilities. So the liabilities of the bank which are the payable on demand anytime. So on those liabilities which are occurring in 1 month's time due to the maturity time for 1 month. Next question is write the meaning of the open market operations. In narrow sense, the central bank starts in the purchase of the sales of government securities in the money market. In broad sense, they purchase the sales, central bank purchases and sell not only government securities but also the other proper eligible securities also like bills, securities and private concerns. When banks and private individuals purchase these securities, they have to make the payment for these securities to the central bank. So next question, what is rationing of credit? So rationing of credit is the oldest method of credit control. Rationing credit as an instrument of credit control, the England by the end of the 18th century, it aims to control and regulate the purpose of which credit is granted by the commercial banks. It is generally of two types. Okay. That last questions. Mention the functions of agricultural credit department. So the functions of agricultural credit department to maintain and express staff to study well questions and agricultural credit, to provide expert advice to the central and state government and the state cooperative banks other banking activities, to finance the rural sector through the eligible institute engaged in the business of agricultural credit to coordinate their activities. Thank you students. Remaining we'll see about next class. Stay home, stay safe. Bye bye.